Time for our 360 round. We want to focus on Supermicro, of course, first quarter earnings on Tuesday. And we've seen this obviously coming under pressure, as I noted, after that Hindenburg report. I think that was in late August. It was a short report. There were concerns about accounting, and that has continued onward. Let's talk to Matthew Bryson, Senior Vice President, Equity Research at Wedbush Securities, and Ed Butowsky, Managing Partner at Chapwood Investments. So, Matthew, what do you make of Supermicro? What are you watching for a name that's down about 75% now?
Nicole, I'm looking for them to resolve the issues around their financials. So I think until we get clarity on exactly what the issue is, when they can file, that it's going to be difficult for the stock to move up. We have a template of what happened before when Supermicro was delisted. They had relatively similar earnings power. The stock bottomed out at a mid to high single digit type price. And so that's potentially your downside if they can't resolve these issues.
Look, the company lowered its financial outlook. There are still a lot of investors concerned about the accounting issues. JP Morgan downgrading the stock to a neutral from neutral to underweight, and the price target on the stock from 50 down to 23. It is at $20 or so now. Ed Butowsky, would you buy this stock here? Is it some great buy to you, or you wouldn't touch it?
I would buy it with your money, not with my client's money. I'll tell you, Nicole,
Don't say that. Not with my money.
It is a hot potato, and you have no idea, why the auditors quit. I mean, that's a huge red flag when an auditor quits and says they're not going to do your business. That means there's something really grossly wrong with your accounting. Now, from a business standpoint, they also are not getting the NVIDIA chips like they used to. And I think a lot of companies are starting to kind of stay away from them at this point. So I think that that's going to also interfere with their ability to do business, the accounting irregularities. So I think that there's multiple levels of different disruptions that are going to happen because of the accounting irregularities.
Here's my question, Matthew. The stock is at $20.94 today. The accounting is still very much an issue. Words like fraud, misconduct, mismanagement are being tossed around in an investigation into this matter. And the question for shareholders is, do they take the loss, get out here? Could it go further to the downside? Ed Butowsky made the point of Ernst & Young, the auditor that they had, that stepped away, which is highly unusual. Do you recommend folks step out here and sort of take what they can get and salvage, or wait it out?
Yeah, so the reason I'm neutral on the name is simply because I think in terms of what's going on the accounting side, it's something of a black box. So you just don't know when they're going to resolve their issues. Again, having said that, we have a template, so we have some idea of what the downside is. And regardless of what's going on in business fundamentals, remember last time this happened, their business didn't fall off a cliff. It basically sat stagnant for 3 years. But again, the stock with somewhat similar earnings power traded down to the high single digits. And so I think that's your risk. And until we see them come out, either get delisted, so let's call that a worst case scenario, or until they come out and say, our issues are resolved, we're filing our 10K, then I think you have room for further downside.
A special committee has now recommended some remedial measures for the company to strengthen the internal governance and oversight functions. That should bring at least a little bit of confidence for folks. And Ed, you made it pretty clear you're not really interested in this name at this point because there are still so many concerns. I would like to hear about your big picture on the market, Ed, as we're hitting new highs across the board, where you think this market and economy could be headed with a Trump administration. And potentially, I saw the Wall Street Journal say something like it looks like the House and the Senate go to the Republicans. Some thoughts?
Yeah, I truly believe, and I've said this before on your show, that we're going to see lower interest rates as we get towards the end of the year. And then into next year, we're going to see lower interest rates, which are going to stimulate any type of dividend paying companies. So normally you would say that growth companies would do well during that time. But I also believe dividend paying companies like utilities are going to continue to outperform. But you also have to remember that the PE ratio on the S&P, if you take out the Magnificent Seven, you're still talking about a 20% overvaluation based on expected growth. So we're going to have to get the growth part fixed pretty quickly. But I do look for very positive things happening in the stock market.
Yeah. And when we think about the servers and other competitors, Matthew, do you have names in the group that you believe in at this point that you recommend?
I mean, certainly, if you look at the server side of things, to some extent, I would expect Dell, Gigabyte in Taiwan, to maybe HPE to be beneficiaries of Supermicro stumbles, just because they are the alternatives, and I believe that some customers are at least thinking about what to do if they're large Supermicro customers.
Yeah, understand. Dell today up 1.9% and HPE up 5.3%. Matthew, Bryson, Wedbush Securities, Ed Butowsky, Chapwood Investments. Thank you both.